inflation rises to 3%, its highest level in 5.5 years. The increase will crank up the pressure on the Bank of England to hike interest rates next month to curb inflation. RPI remains at its highest since 2012. Business rates will jump by 3.9% next April as a result. Sterling sinks as Mark Carney speaks at a select committee. The pound falls 0.7% against the dollar to below $1.32. FTSE 100 closes 0.1% lower. Theme park owner Merlin nosedives 16% after a difficult summer of trading, blaming terrorism and bad weather. 4:55 p.m. Bank of England Governor Mark Carney. Inflation has nudged up to its highest level in 5.5 years to turn up the heat on the Bank of England's Monetary Policy Committee. The central bank's policymakers are expected to lift interest rates next month in an attempt to ease the squeeze on UK households caused by inflation rising to 3%. Sterling has been supported in the last month by the expectation that the central bank will hike rates to curb rising prices, but Governor Mark Carney failing to provide any new indications on monetary policy, and new Deputy Governor Sir Dave Ramsden revealing his dovish tendencies in Parliament has dragged down the pound 0.7% against the dollar to $1.3187 this afternoon. Mr. Ramsden said that he was not part of the majority of those on the MPC who favoured a rate hike, while Mark Carney couldn't give any clear signals to the markets on whether the central bank will push the base rate up to 0.5% in November. Elsewhere, mining stocks have pulled the FTSE 100 down into the red late this afternoon as metal prices soften, while Thorpe Park owner Merlin Entertainments has plunged 16% after terrorism and bad weather weakened its summer of trading. ETX Capital analyst Neil Wilson commented on sterling's movement this afternoon. Sterling lost ground as the market decided the Bank of England is no longer definitely minded to hike rates in November. Mark Carney suggested tightening may be warranted in the coming months and failed to give an explicit signal on November, while Dave Ramsden sounded overtly dovish. Some sterling bulls threw in the towel, but this looks a trifle cautious. While not nailed on, the hawks should edge it next month. 4:26 p.m. Virgin Money Chief Executive Jane Angadir. Virgin Money has insisted it has a safer credit card business than Britain's big banks, amid growing fears over ballooning consumer credit. The challenger bank's chief executive Jane Angadir told analysts today the company had conducted its own extreme in-house stress test of its expanding credit card book and found in a downturn it would face fewer problems than its peers. Last month, the Bank of England warned lenders they risked losing as much as £30 billion on personal lending if the economy took a turn for the worse, with as much as a quarter of credit cards defaulting. But Ms. Gadir said Virgin's own credit card business, which has grown balances to £2.9 billion, would fare better than its peers. Reed Ian Withers' full report here. 3:36 p.m. The Dow Jones has nudged up 0.1%. U.S. markets have opened and the Dow Jones has nudged up into positive territory, leaving it on course for another record finish. The index has been dragged up by United Health's 4.8% jump on hopes that a decline in medical costs at the health insurer could boost full-year figures. There's a bit of economics data to update you with from the States this afternoon. Industrial production growth bounced back in September to rise by 0.3% after being disrupted by hurricane season the previous month. Paul Ashworth, chief U.S. economist, said there were still signs of disruption evident last month, leaving scope for a much bigger rebound in production in October. He added, overall, with global trade and economic growth booming and the dollar still down substantially from its peak early this year, the outlook for U.S. manufacturing looks bright. That optimism comes through in the upbeat survey evidence. As a result, we expect solid gains in manufacturing output in the fourth quarter. 3:06 p.m. Investors have left Revolution Bars shaken after rejecting a cash offer for the company. Shares in Revolution Bars dropped as much as 8% after a second potential suitor in 2 weeks was left unable to secure a deal. Stonegate, the owner of the slug lettuce chain, had bid £2.03 a share for its rival, valuing the chain at £100 million. But it failed to secure shareholder support for its cash offer, sending the target's shares down to 176p. Owners of just 60% of Revolution's shares voted in favor of the Stonegate bid at each of the two separate court and general meetings held by the company to allow investors to express their view on the deal. To be successful, the bid needed 75% of shareholders to vote in favor. Read Bradley Gerard's full report here. 2:27 p.m. ASOS makes 2/3 of its sales overseas. ASOS profits have doubled in the past year as the online retailer's rampant overseas expansion allowed it to storm past its struggling British high street rivals. The fashion site has delivered a 145% jump in pre-tax profits to a record £80 million, while group sales have surged by 33% to £1.9 billion in the year to August 31. ASOS' upbeat numbers are partly down to the rapid consumer shift from traditional bricks-and-mortar shopping to clicks on mobile devices. This has resulted in the online fashion market growing at twice the rate of the overall fashion sector over the last 5 years. However, Nick Baton, ASOS boss, said that it was not enough to just be online. He added, there has been a continual channel shift as 20-somethings use their mobile phones, but you can't just be digital, you've got to be selling what people want to buy. Read Ashley Armstrong's full report here. 2:09 p.m. Pearson Chief Executive John Fallon is under pressure. The troubled education giant Pearson has suffered a further decline in its core American textbook business in the third quarter but avoided its worst fears, to the relief of investors. On the back of a string of profit warnings, Pearson said the improved trend meant it could narrow its full-year profit forecast to the upper end of the range. The company, which has cast off media assets such as the Financial Times to focus on education in recent years, now expects a minimum adjusted operating profit of £576 million. The previous lowest prediction was £546 million. The improvement reflects a 5 percentage point cut to Pearson's expected tax rate for the year to 16% following the favourable outcome of certain historical tax issues. Read Christopher Williams' full report here. 1:45 p.m. Prices jumped by 3% in the past year, the fastest rise in more than 5 years as imported inflation and higher energy prices pushed up the cost of living. Food prices climbed as inflation in staples such as bread, rice and meat accelerated in September, while transport costs also rose as petrol became more expensive. Computer games and theatre tickets also dragged up the consumer price index, the Office for National Statistics said. Read Tim Wallace's full report here. 1:16 p.m. Bank of England Governor Mark Carney final question is about the gender pay gap and he replies that the gap is 24% on a median basis at the Bank of England and 21% on mean basis. He says they are in the middle of a deliberate strategy of changing this at the central bank. And with that, it's over. Nothing much new there, to be perfectly honest. He defended, as he always does, quantitative easing and the interest rate cut taken shortly after the Brexit vote, while also allaying fears about ballooning household debt. Sterling took a bit of a battering during that appearance, sinking 0.7% to below $1.32 against the dollar and 0.3% against a basket of the leading currencies. 1:03 p.m. Bose Carney we don't have to go as close to 2% inflation to start QE unwind. Live Squawk at Live Squawk October 17, 2017 Bose Carney bank rate, not QE, will be relevant instrument for policy for some time to come. Live Squawk at Live Squawk October 17, 2017 We move on to quantitative easing and Mr. Carney is given a quote comparing it to heroin. Extending the metaphor, he replies we're clean and not addicted to QE or will go through withdrawal symptoms. He adds that the Bank of England will not just unwind for fun and prove a point, adding that the central bank will observe the Fed's balance sheet unwinding program. 1:50 p.m. When asked if he is too relaxed on household debt, Mr. Carney says that the Bank of England is taking action on household debt but to an appropriate degree. It only merits a macroprudential response, adding that we're never relaxed about anything. On government fiscal policy, he says that he will not and cannot give his opinion, and when asked if Help to Buy has pushed up house prices, Mr. Carney says that it hasn't had a multiplier effect on supply. 1:39 p.m. Carney talks down the car finance bubble, saying debt burden of that is actually overstated. Owen Bennett at Owen Bennett October 17, 2017 Moving on to household debt, Mr. Carney is relatively upbeat. He explains away fears of a car finance bubble and says that the quality of borrowers has gone up substantially. We should take the lead from the markets on Brexit given its complexity, he adds. It matters more how households and businesses react. Even market perception that there is going to be a material change in circumstances will make forecasts challenging, says Carney. Faisal Islam at Faisal Islam October 17, 2017 1:20 p.m. New Deputy Governor Sir Ramsden is not ready to vote for an interest rate hike. I missed new Bank of England policymakers Silvana Tenreiro and Sir Dave Ramsden's grillings this morning, but fortunately Reuters was watching. Here's what happened. New Bank of England rate setter Silvana Tenreiro said she was not ready to vote to raise the bank's record low interest rates in November, although she might do so in the coming months if inflation pressure builds in Britain's labour market. My view is that we are approaching a tipping point at which it would be necessary or justified to remove some of the stimulus, she told British lawmakers on Tuesday. New Deputy Governor Dave Ramsden said he was not close to voting for an interest rate hike, raising some questions for investors about when the BO would make its widely expected first hike in more than a decade. Deputy Governor Dave Ramsden said he was not part of the majority of BO policymakers who believe a rate hike is likely to be needed in the coming months because he saw little sign of inflation pressure building in Britain's labour market. Carney says business is less confident about a smooth transition and good end state from Brexit. Consumer confidence holding up much better. Richard Partington at Arch Partington, October 17, 2017. They're still questioning Mr. Carney. But the debate has centered on Brexit, on which the governor can't give many certain answers. They've just moved on to household debt. I must admit this select committee is lacking some teeth. HES having quite an easy ride. 12:05 p.m. The overall tenor of MPC testimony seems dovish. Carney diverges from Fed in saying he doesn't want to warehouse hike as USD 3,200 in view. BK4X at BK4X Ideas, October 17, 2017. Since Mr. Carney started speaking, the benchmark 10-year gilt yield has fallen 3.2 basis points to 1.30%. Meanwhile, on the currency markets, against a basket of the leading currencies, the pound has sunk to a 0.2% loss for the session, while against the dollar sterling has slipped 0.6% to $1.32. SpreadX analyst Connor Campbell commented on the appearances by MPC members this morning. There were conflicting messages from the BO this Tuesday. The central bank's newest deputy governor, Sir Dave Ramsden, stated he wasn't one of the MPC members who said they were close to raising rates last month. In contrast, policymaker Silvana Tenrero said she would be minded to vote for a bank rate increase if the UK's data justified it. As for head honcho Mark Carney, he dismissed a question from the Treasury Committee asking whether it would be wise to raise borrowing costs in order to give the BO room to cut in the case of a recession, arguing that it isn't appropriate or necessary given that policy can move quite nimbly. 11:51 a.m. Bo's Carney absolutely in EU's interest to have a transition Brexit agreement. Believes there will be one. Live Squawk at Live Squawk, October 17, 2017. Mark Carney. Bo done preparations for hard exit without any transition period, but much less in EU and its firms on derivatives. Faisal Islam at Faisal Islam, October 17, 2017. They move on to the subject of clearing, and Mr. Carney warns against moving clearing out of London, saying that fragmenting European clearing would create costs for the European real economy. He adds that the Bank of England is working on a contingency plan for a hard exit without any transition period, but believes there will be a transition deal. 11:35 a.m. Bo's Carney building a war chest in interest rate terms for future shocks would not be in line with inflation target. Live Squawk at Live Squawk, October 17, 2017. Carney rate hike in coming months may be appropriate. Michael at Lampiddock Sparrow, October 17, 2017. Mr. Carney disagrees with this select committee member, arguing that the interest rate cut after Brexit was unnecessary. The pound has largely been determined by the prospects of the trade deal with the European Union. It was the market's judgment on how Brexit will affect real incomes that will ruffle a few feathers. Raising rates now to potentially support the economy later with a cut is not consistent monetary policy, he says to another question. He also reiterates that the MPC believes that a hike in interest rates in the coming months will be appropriate. 11:26 a.m. Bo's Carney. We still face a trade-off between inflation above target and supporting jobs and economic activity. Live Squawk at Live Squawk, October 17, 2017. Bank of England Governor Mark Carney has just started his appearance at the Treasury Committee. He said that the Bank of England expects inflation to peak in October, admitting that it is likely that he will be writing a letter to the Chancellor explaining why inflation is so far from the 2% target rate. He emphasizes that the effects of monetary policy takes time to feed through, adding that some factors pushing up inflation are out of the central bank's control, such as rising oil prices. 11:19 a.m. All eyes will turn to tomorrow's wage growth reading, which is expected to remain flat and lag far behind inflation at 2.1%. Back to the reaction to today's figures. Capital Economics UK economist Paul Hollingsworth believes that the Bank of England will probably be focused more on tomorrow's wage growth figures for any signs that domestic cost pressures are building. He added, nonetheless, the fact that this is the last set of inflation figures before the key MPC meeting on the 2nd of November, they will be a key factor in the committee's thinking. What's more, September's inflation figures are used for the uprating of some benefits. Kate Smith, head of pensions at Aegon, explains how today's figures affect the lifetime allowance this month. Inflation figures are uniquely important because they are used by the government to calculate the rise in the lifetime allowance LTA for the first time. The increase for the LTA in 201,819 will be £1,030,000 based on today's figures, and following a series of reductions it is welcome that the base level is set to start growing again, even if on the surface the numbers aren't large. Despite being small, this is a complex area, so those affected should seek financial advice to make sure their pension is protected from additional tax charges. A quick sitrep on the pound. Sterling has nudged a little further down against the dollar to a 0.3% loss for the session at $1.3250, while against the euro it remains 0.2% higher at €1.1270. 10:54 a.m. Inflation will exceed 3% in October before falling back towards the 2% target by the end of 2018, according to Pantheon Macro. Just a reminder that Mark Carney and two other Bank of England policymakers are currently appearing in a Treasury Select Committee and will bring you the latest from Parliament as it comes. Let's have a look at what the experts made of today's figures. Pantheon Macro UK economist Samuel Toombs believes that inflation will slip below 2% by 2019, meaning that the MPC will be discouraged from raising interest rates more than once in the next 12 months. He added inflation looks set to fall sharply in 2018, now that retailers have nearly completed sterling-related price rises. Domestically generated inflation has remained muted. Indeed, inflation in the services sector was just 2.7% in September, well below its 3.7% average in the decade before the recession. EY Item Club's chief economic advisor Howard Archer believes that it would take a surprisingly weak earnings figure tomorrow and particularly poor third-quarter GDP growth to stop the MPC from lifting interest rates next month. The painful squeeze on consumers will begin to gradually ease during 2018, he added. 10:20 a.m. Inflation nudged up to 3% in September, its highest level since April 2012. Inflation remaining far above the Bank of England's 2% target rate will crank up the pressure on the central bank to raise interest rates at next month's Monetary Policy Committee meeting. The ONS said that rising prices on food and recreational goods along with transport costs were the main factors putting upward pressure on the reading. RPI remained flat at 3.9%, an almost six-year high, meaning that business rates, which are determined by today's figure, will rise substantially next April. This will be the last straw for many SMEs, said the Federation of Small Businesses. The increase in the headline figure was forecast by economists and thus the pound is unchanged following the release, remaining 0.2% lower against the dollar this morning at $1.3260. 9:58 a.m. RPI at 3.9% also suggests a fuel duty hike of nearly 3p per litre in April 2018 unless the Chancellor acts. Steve Hawkes at Steve_Hawkes October 17, 2017. Although the retail price index reading came in flat at 3.9%, a slightly softer figure than economists were expecting, it will heap more misery on small businesses, according to the Federation of Small Businesses. Today's RPI reading means that business rates bills will rise by 3.9% next April and that increase will be the last straw many SMEs, its national chairman Mike Cherry said. He added today's RPI figure follows 6 months of business rate misery for our small business community. Since April's bruising revaluation we've had the staircase tax, introduction of an unworkable appeals platform and chronic delays to the Chancellor's £435 million relief package. A near 4% bill increase next April, on top of losing Year 1 transitional caps, will be the last straw for many. The Chancellor should give careful consideration to his inaugural autumn budget. The last thing our businesses need is new tax increases, a loss of entrepreneurial reliefs. 9:46 a.m. The UK inflation number does not bode well for real wage growth. Sven Henrik at Northman Trader October 17, 2017. Mr. Carney will not be dusting off the parchment and pen to write the Chancellor to explain why inflation has veered so far from the Bank of England's 2% target rate, and he has done it by the skin of his teeth. While the rise to 3% was expected, inflation hitting its highest point in 5.5 years will turn up the heat on the Bank of England's Monetary Policy Committee. The central bank's policymakers have dropped some very strong hints in the last month or so on raising interest rates, but this combined with reasonably solid economics data of late will make it very difficult for the MPC to leave the base rate unchanged in November's meeting. Meanwhile, on the currency markets, sterling has barely budged an inch after today's headline CPI figure came in line with economists' forecast. 9:34 a.m. 3% inflation will definitely serve to spur MPC on to a rate rise in November. Will they have the mettle to actually follow through? Andrew Montlake at Montes blog, October 17, 2017. Inflation increased to 3% in September, its highest level in 5.5 years. The reading was in line with economists' forecasts but will crank up the pressure on Bank of England policymakers to raise interest rates at the next Monetary Policy Committee in November. More to follow. 9:17 a.m. Shares in the Legoland owner have plunged today. Shares in the owner of Madame Tussauds and Alton Towers tumbled in early trade as it revealed the impact of recent terror attacks on trading in the UK. Merlin's latest trading figures confirmed the hit from terrorist attacks on UK attractions in the peak summer months, which left group like-for-like revenue growth almost grinding to a halt, edging up 0.3% in the 40 weeks to October 7. Poor weather across the UK and Northern Europe and extreme weather in Italy and Florida were also to blame, according to Merlin. Shares plunged 19% to 365p. Merlin also unveiled a deal to roll out new Peppa Pig attractions worldwide. The agreement with Entertainment One, which owns the rights to the popular children's cartoon character, is to develop new attractions and themed accommodation based on the preschool favorite. Read the full report here. 9:15 a.m. 3. UK inflation is higher, but not wildly different to peers yet. Changes in energy inflation are a global thing. Core is the one to watch. pic.twitter.com 1ZCLFQLHVC, Rupert Seggans at Rupert Seggans, October 17, 2017. Let's have a quick roundup of what the experts are saying ahead of today's inflation figures. CMC Markets analyst Michael Hewson explains how Bank of England Governor Mark Carney could be put in an embarrassing spot this morning if CPI rises by more than 1% above the bank's 2% target. Governor Carney will have the unenviable task of having to write to the Chancellor explaining why inflation is above target, and what the bank intends to do about it. He can't very well say, well Phil, it turns out that rate cut last year wasn't such a good idea, but don't worry, we've got it in hand and we're going to put rates back to where they were beforehand. It could be a busy day for Mr. Carney with all this letter writing and select committees. Although I imagine HES had that inflation letter saved in his drafts for some time now. Spreadex analyst Connor Campbell provided this preview. That's because investors are eagerly awaiting September's inflation reading, which is set to see the consumer price index finally hit a 5-year high of 3.0%. Such a reading would put even more pressure on the Bank of England to raise rates, though that hawkish urge may be tempered by the continued fall in real wages set to be confirmed tomorrow and a sharp month-on-month drop in retail sales coming on Thursday. For now, however, the pound is focused on inflation. Cable is up 0.1%, though admittedly half a cent away from the $1.33 levels it was tickling on Monday morning, while against the euro sterling has climbed 0.3%. 8:54 a.m. 2, sterling's still not done with core prices. Means a higher starting point for any further food energy price rises to hit overall inflation. pic.twitter.com Omixaox, Rupert Seggans at Rupert Seggans, October 17, 2017. Some have taken Bank of England policymakers' sudden hawkish turn on interest rates with suspicion, but today's inflation figures are expected to bolster the consensus view that the Monetary Policy Committee will pull the trigger on interest rates next month. The headline CPI figure is expected to rise to its highest level in 5.5 years and make an increase in the central bank's base rate almost a done deal. UK CPI inflation likely to be 3% or above in today's release for the first time since spring 2012. Another good reason for November rate rise. Andrew Sentence at A Sentence, October 17, 2017. With no inflation report being released in conjunction with a headline CPI figure, there will be no press conference following the release, but Mark Carney will be appearing in front of the Treasury Select Committee later today, who I'm sure won't skirt around the issue. Today will also be the best opportunity yet to size up the newest members of the MPC, Silvana Tenrero and Sir David Ramsden, who will be appearing alongside Mr. Carney. 8:25 a.m. It could be a rollercoaster day for Merlin Entertainment shares. UK inflation figures steal the limelight this morning, with a headline CPI reading expected to nudge up to 3% and confirm that the squeeze on UK households has become a little tighter. If inflation pushes any higher, Bank of England Governor Mark Carney will be put in the embarrassing predicament of having to write a letter to Chancellor Philip Hammond explaining why the headline reading has strayed so far from the central bank's 2% target rate. Combined with tomorrow's wage growth reading, today's figure is expected to crank up the pressure on the BOE's Monetary Policy Committee to reverse last year's emergency interest rate cut and push up the base rate to 0.5% in November's meeting. Ahead of the figures, the pound is having a mixed morning on the currency markets, dipping 0.2% to $1.3265 against the dollar and nudging up 0.2% to €1.1271 against the euro. Asia stock market rally paused as bonds hit by Fed chair talk on speculation the next head of Fed Reserve will be more hawkish. Dollar gains. Pic.twitter.com Vm82ZL, Holger Z shape hits at Sholden Swainer October 17, 2017 on the retreating FTSE 100 theme park operator, Merlin Entertainments has nosedived 20% after enduring a difficult summer of trading. The Thorpe Park owner blamed terrorism and bad weather and admitted that revenue growth for 2017 is now expected to be approximately flat. At the other end, publisher Pearson, which has suffered from a string of profit warnings of late, has popped 7% after reporting that full-year operating profit will be in the upper end of estimates. Interim results. BP Marsh Partners full-year results. Utility-wise by Aventix, Orchard Funding, Bellway, ASOS. Digital Group, Gene Drive Trading Statement SEGRO, MoneySupermarket.com, Merlin Entertainments, Pearson, Mediclinic International, Virgin Money, Ebraz, BHP Billiton ADM Frontier Developments Economics PPIM UK, RPIYY UK, CPIYY UK, HPIYY UK, Import Prices MMUS Industrial Production MMUS, NAHB Housing Market Index US, ZEW Economic Sentiment EU, Final CPIYY EU.